BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's have a quick look at Bitcoin then. I've neglected you guys on this channel for the last few days. I've just been so busy and I've got other things on at the moment, so sorry about that. It's not my intention to do that. I will try and be as present as I can wherever I can, but yeah, and of all the times I suppose for me to be absent, it's a time like now when we see price action coming down. Whoa, breakdown, boom, 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 boom. Boosh. So, right, so it's not good, but it's also not terrible. So this box, as irrelevant as it proved to be when we broke down, recognize that when we did break down from here, we hit a 200 exponential and simple moving average and started this, well, it's an ascending triangle, isn't it? Which broke down as well, surprisingly, to be honest, because this is generally more bullish than bearish, but we broke down, well, way before the end of the apex, and we got continuation. And where did we get continuation down to? The 4-hourly 200 exponential, which has so far mostly, more or less, held. And currently we're trying to, again, forge another candle body closing above it. Again, every candle body that closes below it, which for for Bitcoin is going to be 65,500, offers the realistic possibility of going further down. So if we're going to think about this level by level and piece by piece, we got those wicks, which again, I'm looking at these supports as moving average supports. And we can also look back and go, well, it's horizontal as well, and it will be if we do come down to it. Look, some people will see that as a support because that's where we came down to last time. But you know me, moving averages are my preference, my bread and butter. And we saw moving averages getting support here and here. But look, the first level below here of support is going to be 62,500. And then the wick low down here just below 61,000. Let's have a look at momentum. What's going on with momentum? Anything going on with momentum? Not really. We don't really have any. Now we certainly don't have any bullish divergence taking place here. So as far as momentum is concerned, it still could easily come down. It still wants to come down. We're just holding on to this major support at the moment, and that's all we've got going for us. We have a look at the daily. All right, so if we think about that support that we just drew in and that wick, it is just below the 50 exponential and the 50 simple moving average. The last moving averages, really, of any significance before we consider what it would be like to drop down into the 200 and 200 simple, all the way down to the lower 40s. So let's just hope that that doesn't happen, really, because it could. It definitely could. But for the moment, we're not going to entertain the fact that it will. But it could. And so, yeah, all eyes on the 62 to 63, really. $62,500. Scary times, really. Scary times. Let's check the weekly then. Weekly's hitting that 7 simple moving average, so there's relevance to that area. And then the 10 exponentials down here at 61,000. So there is still plenty of support below us, but they're below us in increments. And look, we're getting closer and closer and closer to the halving, aren't we? Which I always believe to be a bit of a non-event. I mean, realistically, moving forward after the halving, yeah, there's an economic reality that starts to kick in after the halving because, obviously there's half the Bitcoins have been dished out, aren't they, to miners? But, leading up to the halving, it gets priced in by you, me, ETFs, and Captain Noobmaster himself. And so, yeah, it's always been the case. We'll sit here if you've got nothing better to do, and we'll count down to the halving, and we'll watch the countdown. Oh my God! It's 10, 9, 8, and then we get 3, 2, 1. The halving is here, and the price basically just goes like this. Meh. At best, it'll say meh. At worst, it'll basically just fall out of the sky. But yeah, I mean, when it comes to this chart, I mean, it's still obviously massively bullish. And I expect it to stay bullish. If, for whatever reason, things start to get particularly nasty, 51,000 is the centre of this Bollinger Band, your 20 weekly. And if we were to measure from the peak to the here, that would be a retrace of only 30%, which is absolutely perfectly acceptable for Bitcoin to do that. It's the altcoins I feel sorry for. So if we're going to feel sorry for altcoins, let's have a quick look at the Bitcoin dominance chart. Surprisingly not breaking out, to be honest with you. Surprisingly still finding rejection at this area. It builds a case for the fact that altcoins, regardless of what you might think of them, still offer opportunity, you know, and look, until we break out from here, this looks like an area where we could still find rejection all the way back down to these lower zones, 52. I wouldn't hold your breath. I'm more interested in these areas up here for a larger rejection, 57.5% dominance, because that goes back to quite a lot of price action on this chart, really. And again, it's not the oldest chart in the world, so we don't have the most amount of price action for it, but that's where I'll be looking for the rejection, a larger rejection and a bigger alt season. So there's money to be made for investing into certain altcoins, as long as you haven't bought the worst ones. You got to ride the waves of volatility, clearly, we all know that. Dixie surprisingly getting rejected as well, so we're just going to have to sit and watch and wait. Looking at the S&P's still got that major bearish divergence on the money flow index on the weekly, but as far as price action is concerned, it's still wanting to go up. So it's a strange time. It is a strange time. I'm still quite happy to be in a large cash position. I was reducing it over the last couple of weeks. I managed to reduce it to about 70% cash. Obviously, since the prices have come down, it's probably getting closer to 80% now, because the crypto that I was holding, that 30% of crypto overall, has probably lost about 10%. So I am at this point now 80% cash position, which was my target before the halving. Even though I achieved that target through losing, well, my altcoins being devalued to the tune of 10%, but it's not a big problem for me at all. It's still, as far as risk to reward is concerned, I balance my portfolio according to what I would consider the risks to be in the market at this time. But like I said, overall, whether we come down by another 30%, which obviously would be for altcoins 50 to 60% probably, whether we come down by that, you know, the way that the model still points forward after the halving into the end of this year, into next year, still points to higher highs for the most part, as long as you haven't bought the worst thing you've ever seen in the world. So with that in mind, you know, hodlers will almost always win. And that's why I'm a big believer in the hodl strategy, especially for people who aren't able to pay attention to charts, perhaps maybe don't quite understand them, don't have the capacity or the time to trade, which is fine. Everybody has their things, you know. Everyone's got a place in society, and it's important to have that, because we can't all sit at home clicking buttons pretending that we know exactly what's going to happen on these markets tomorrow, because no one really does. But my expectation is that at this very moment in time, we are at a major support, and so long as we maintain these areas of support, we're going to call it 65,500. It's a 4-hourly 200 exponential closures on a 4-hourly above that. Then we do have an actual chance at making our way back up. 67 to begin with, 68 again, increments, all the way up to the lower 70s. Absolutely possible, on the cards. Have no real reason to believe that that's a strong possibility based on what the chart looks like right now. It could do that, but I would have much preferred to have seen some bullish divergence on the shorter term time frames, and we don't really have that. So yeah, it's on thin ice. We'll call it thin ice. Right, so I am going to leave it with you there. Thanks for watching, and sorry about the lack of videos and streams this week. It's just sometimes stuff happens, doesn't it? You know, sometimes stuff happens, and you just got to deal with that. Got to drop everything and deal with that. That's what I'm doing at the moment. Anyway, thanks for watching. Take it easy.